All right, back to work. Back to work we go. Wednesday is behind us. Hope you guys made some money out there. It's time to get back to work, though. Thursday is coming at us tomorrow. We get some more inflation news tomorrow, and we finally got some nice, great moves this afternoon, which are going to set us up for some nice big trades coming on Thursday. You know how we do it on these videos. I'm going to cover all my favorite trades in tonight's video. That way you have a game plan to make some money on Thursday. Before we jump in and get this party going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video. And if you guys enjoyed the video tonight, shoot me a holler. Give me a holler out in the comment section below and hit that like button. I appreciate you guys tuning in and supporting this YouTube channel. But enough of the intro. Let's get ready for Thursday. We got some big inflation data coming tomorrow. And I'll tell you, it took them a little bit longer than we would have liked today, but we finally got that nice rotation off the lows that we talked about 24 hours ago in last night's video. As you can see here, everything, well, the S&P and the Nasdaq, the SPY and the QQQs, they're all pretty bullish right now. Again, took them a little bit longer than we would have liked today. It was a bit of a messy start to the morning, but as we talked about in last night's video, expecting that rotation higher. So we're definitely bullish. Now, what'll be really important tonight is that you'll notice that, for example, the S&P has a ton of open space above us, but the Nasdaq does not. So they're both bullish, but each of them has a slightly different game plan to make money. So we're obviously looking for price to continue here. We get some more space to go. I'm looking for some pullbacks. I'm looking for some breakouts. And if we get lucky tomorrow, I'll tell you, there's some good spots up here for some reversals. I got a couple of reversal trades on my radar, and I'll talk about why I say that in a moment. So, well, I'll tell you, we've had a great week so far on the S&P and the Nasdaq in our trade room, and we'll put together a good money-making game plan for us for Thursday. Oil looks a little bit punch drunk right now after the inventory report. We got rollover coming tomorrow as well. They finally got that retest that we talked about in last night's video, and now we're looking for that run back up into that trading range. Might not be easy to get that run, and I'll talk about why I think that and how we can make some money with some traps, some bear traps on the oil for tomorrow. So we are definitely going to cover all my favorite trades, again, that we can make some money on Thursday. Speaking of Thursday, though, let's make sure we all get in the same page here real quickly. We got some more inflation data coming tomorrow. We heard from the CPI number on Tuesday morning. Well, the cousin of the CPI number, the PPI, the Producer Price Index, doesn't normally move the markets as much as the CPI number. The CPI number is consumer prices. Consumers drive the economy, so that tends to get more attention. We get the PPI number coming on Thursday morning. That, of course, is the Producer Price Index. Not as sexy as the CPI number, but it's definitely going to be a market mover for tomorrow. Throw in some Philly Fed, and we definitely have the potential for some catalysts tomorrow, bright and early. And I'll tell you right now, if we get half as much opportunity off the PPI number that we did on Tuesday's CPI number, I think everybody will be pretty happy tomorrow morning in our trade room. So keep that in mind for tomorrow, 8:30 Eastern time, and then we're going to OPEX on Friday. So make sure you come back tomorrow night, and we'll talk more about how to get ready for OPEX. Not quad witching, that's next month. We'll talk about OPEX though in tomorrow night's video. So don't go anywhere. We're just getting this week warmed up. Back to our charts though, because of course the money is made on the charts. Now, speaking of money, if you like making money right now, if you like making easy, quick money in these markets right now, make sure you watch all the way through to the end of this video, because I'm going to cover all my favorite trades on each of these charts. And I'll tell you, each trade I talk about can be applied to your favorite market. So whatever I talk about on the S&P can be applied to oil. Talk about the Nasdaq can be applied to the S&P. So again, get comfortable, take some notes, take some screenshots. If you got any questions, hit me up in the comment section below. Let's go jumping in though. S&P first, Nasdaq, and we'll wrap things up on the oil. What's the most important factor right now on the S&P? Actually, before I go into this though, don't forget, these are all tick charts. That is a 10,000 tick chart. All the time frames in the upper left-hand corner. That, my friends, is the 21 EMA, the exponential moving average. And as always, I know you guys love this stuff. I really enjoy giving it to you guys. In the description of the YouTube video, I will drop in some higher time frames, some slower time frames, that will be a good complement to these charts. And so we'll be talking about different tactics here tonight, and you can kind of see a different way of looking at the charts and what helps me kind of visualize the best trades. Grab the links in the description for a bunch of 60-minute time frames that have been freshly updated with all the current information. So grab those if you want to see more details down the description. Okay, now, what's the most important factor on this chart right now? Well, you'll notice, of course, if you zoom out, kind of the most important factor is this has not changed since yesterday, right? You were here last night watching last night's video. We talked about the fact that we had this big range, right? And we're anticipating a pullback. I didn't get that full, bear trap down here we talked about, but we definitely had enough to put together some failures and get this run going higher. So now we have that rotation off the low that we talked about 24 hours ago. And now there's really just one big bullseye, right? The market, the buyers are in control. They have a nice, strong trend going higher. And you have to think, right? They're trying to take out this high. They're trying to take out the pendulum swing. And again, a lot of this is the same that we talked about in last night's video. So knowing where we're going, knowing we have this kind of rotation off the low, we've got some strength behind us, as you can see. And also, too, we have space, right? We have quite a bit of space to go here, which kind of gives us a lot more wiggle room than you would have on, say, the Nasdaq tonight. And again, we'll talk more about the Nasdaq here in a moment. So what are my two favorite trades right now on this S&P? I think my two favorite trades would be what we call failure patterns, right, off the low of this channel. I'd love to see a pullback. And, again, we're trying to go up, right, and I'd like to buy pullbacks if I can. One of my favorite trades for tomorrow will be to get underneath the 21 moving average, like we saw early this afternoon, right? Get underneath the moving average, trap in some of those bears, and then look for those shorts to get squeezed, right? This will be a nice little squeeze, a nice little, stop run, right? Use those stop runs. You can see how nice and juicy those stop runs can give you easy profit there, right? So that is definitely one of my favorite trades for tomorrow. Again, we call these failures in our trade room. You guys are learning about these in our free trading course. I also wouldn't be surprised if we end up pulling back and kissing that range that we saw. This is kind of an ugly range there, right? A lot of times what will happen is we'll go up, we'll pull back and bounce off that area. I wouldn't mind what we call a two-try failure, right? Deeper pullback now, 1, 2. I wouldn't mind that two-try failure. We're going to talk a lot more about that setup in a moment because I want to go into more details on that one for you. So I'm going to dig into that one a little bit closer, because there could be some variations on that one. That is another one of my favorites, right? It's the same idea, right? Same idea. Deep pullback, trapping the bears. And because we have some more space to go, and because hopefully these bears are squeezed now and getting forced out of their positions, I definitely think another trade I'll be keeping an eye on for tomorrow is going to be a bear trap, right? Up above these highs. We call these bear trap breakouts. And of course, that's another one, right? Now, this might not be the best idea in the Nasdaq, right? This may not be the best trade on the Nasdaq, because of course we'll talk about that more in a moment as I try to go up and retest the high. Now later on in the video, I want to talk about a couple more things. I would love to see some reversals off the high. We'll cover that later on in the video. And I think we also are very possible to get a range. We saw a range down here. I think we could easily see a range up here. And let's be honest, if the buyers can get a range up there, that is a gift. That is a gift for all the buyers out there. We're going to talk about that. We'll talk about that too. So as you can see, the hits are going to keep coming here tonight in this video. So don't go anywhere. So first of all, the move going higher is kind of the easy one, right? The move going higher is easy. As we go higher, we know where we're trying to go, but you can see we're running into a kind of a block of resistance, right? So the best way to do this is strong move, shallow pullback, higher high in price, and what do we always say? Traps, baby, right? One of my favorite trades. We talk about this in the free trading course, right? It's a bear trap, right? It's a bear trap. These are very, very common whenever we're bullish, but we don't want to buy too high, right? We want to buy too high, so we buy as low as we can, and we use traps. I'll tell you right now, if we can combine something like that with a channel, that would be, that's a good trade right there as we finish off that rotation. Let's go back to that channel though. Let's go back to that channel, right? Drop the channel on those lows again. Let's let's talk about the channel here. So that's one way to trade as we go higher, right? The next one is, now watch these closely because there's a couple ways we can do this. Like I said, I want to go into more of the meat and potatoes on this one. So we pull back. Again, just as we saw back here, I'd like to get below that moving average. It's a very strong move up right now. The odds are pretty good. They're going to want to retest that high. And so this is a pretty easy one, right? Get underneath that 21 moving average. Get those bears to come in, right? Get the bears to come in and take the bait. It's not a bear market. It's a range rotation right now. Once they get short, then we know where stops are, and we can look for that classic failure into pullback combination. Now, if you guys are taking my free trading course right now, you know this price action cycle, right? You know this failure into pullback, into strength, into traps, right? Remember, we talk about this in the free trading course, which reminds me, I realize that not everybody has taken the free course yet and learned this little sequence, right? Failures, pullback, strength, and traps. I know most of you guys have, and I love seeing you guys make money with this stuff in the free course. But if you're here for the first time, if you haven't taken the free class yet and learn, I'll tell you, you will learn this sequence in that free course. What I'll do is I'll put a link up there for you in the upper right-hand corner. Grab that link, take that free class linked up in the upper right-hand corner, because the strategy that I teach will not only teach you those entry patterns I just talked about, but it will also give you a really simple trick that'll tell you exactly where the best winning trades will be each day. The roadmap you'll learn is perfect for someone trying to make a career, a full-time trading income out of trading. If you're sick of missing the best trades, if you're not getting the results you want, you definitely want to grab that free course. It'll give you a great roadmap to follow, and you'll begin learning more about failures and traps. You'll love it, and let me know how you do with that, because I love hearing from you guys on the free course. Now, the next thing you want to think about is, okay, we got two more of these, and then I want to talk about going higher here in that possible range, maybe reversal here, okay? So we're going to keep building here. Now, we might pull back deeper. It's a range, right? Ranges can be really nasty sometimes. So we may not get that perfect little pullback, right? It might slice. You know, we talked about how we talked about last night how sometimes when the Nasdaq is at resistance, it kind of brings the S&P down with it, right? So the Nasdaq is kind of high up right now. We may get that deeper pullback. We talked about that correlation last night on the video. If we really slice lower here, this is not a bear market yet, but it's a deeper pullback. So in these situations, now watch this closely here. Because we have that deeper pullback, that stronger momentum move, we now want to let the sellers try twice. Let them try once, higher high, let them try twice. Now think about now where their pain is. Remember, the easiest money you're going to make. One of my mentors told me this 15 some odd years ago. The easiest money you're going to make in trading is when you've got the opposite side of the market trapped and you're buying right into their exits, right? Because in this situation, the buyers are buying low and the sellers are buying because they're getting squeezed. Now, these oftentimes, watch closely, these oftentimes, they don't pull back. They don't pull back and give us that pullback combo that I mentioned in the previous example. A lot of times what happens is these things will pop up and begin to really rip. And again, it's because you've got so many bears that are trapped in this. Speaking of traps, that's the entry you want to look for, right? So if it really jumps up like this, again, you might not get that pullback to the moving average, right? A lot of times it barely pulls back. And again, it's because everybody's squeezed. The price jumps up. They're trying to go back and retest the high. So keep an eye on that two-try failure and then into, like, again, a pullback would be great, or a little bear trap off that low. The last one you want to think about is a V-bottom. Okay, sometimes when everybody is buying, the market simply V-bottoms, pops, and rips right back higher. Okay, these can be pretty frustrating because obviously I want to buy low, but I don't get a chance to buy low, right? That's the hard part about V-bottoms. V-bottoms are one of the more challenging types of markets for price action traders because, again, you don't get a good signal. So what you want to remember on these is if it V-bottoms, right, if there's so many, there could easily be bigger channels there. There could be so many buyers down there. The market simply pops off that low and begins to grind and grind and grind. That's the giveaway. Try trend line off that high. Okay, watch closely. Pin it down at that low. That becomes a new channel. And now we go out And what do we always say? First test? Yeah, first test is the best test off that low. Now, I'm going to keep it simple right now. We'll go into more of the entry tactics in the trade room or in that free trading course linked up top. This could be a bear trap. It could be a seller failure pattern. It could be a pullback combo, strength trade, right? All the entry patterns you guys are learning in the free trading course. The hardest part about these V bottoms is don't chase it as it's going higher. Right? We look for that little pullback off that channel because that's where buyers are getting low, right? They're buying low. They're buying low. We don't want to buy high, all right? That obviously is not the most desirable pullback, but hey, we take what the market gives us. Now, of course, the next thing, and then we'll go to the NASDAQ. I definitely want to talk about going high on the NASDAQ in a moment. The next thing is at what point does this thing become a bear market? So we pull back, right? Let's say, for example, we pull back to the moving average, and now we blast right off that moving average. As you can see here, that's going to be a bullish reversal. But boy, oh boy, is it tough to find a good. It's tough to find a short trade off this, right? It's because you're running right into major lows though. So not my favorite trade to look for the short, right? Just like last time we talked about, not my favorite spot for a short yesterday, right? Or, today, right? We talked about this last night on the video. So if we do end up kind of racing lower, and you'll see more of this in that 60-minute time frame, you'll see why I say this, right? It's very difficult to want to short this thing unless we see a major reversal. So if we do end up kind of ripping back to those lows, I want you to think about these two patterns, okay? These two patterns, and then we'll talk about the move going higher, okay? I'm saving the best stuff for last. If we do end up all the way back at that low, okay, the first one is a crown reversal. Okay, remember at this point now, it'll be very bearish. Okay, it'll be very bearish. And with all that move down, the sellers are going to want to retest that low. Okay, remember, anytime we see a strong move, okay, just like right now, strong move, they want to retest the high. Well, if it goes running lower and takes out that low, that's a strong move, and they're going to want to what? Retest that low. Now, knowing that, keep these two in mind. We run lower, crown reversal. Now, a crown reversal is a fancy name for a two-try failure with a bear trap. This one right there, right on the chart. Notice they go lower, right? They pull back, bears once, bears twice. See how the bears try twice to go lower? They try once, they try twice, and see how they get trapped in, and look at how the market responds to that, okay? Get that pattern over there. Okay, that's a beautiful setup. It's not the most common setup. We'll talk about more common in a moment here. But as they go lower, strong move down, bears come in, they try once, they go higher, they try twice. Now that bear trap. The reason why you want the bear trap is because, again, the strength of that move, you have to anticipate there'll be a channel coming down. There's bears trying to get short off the top. Let them short that. And then once you get that nice, juicy signal candle, right? Once that signal comes in, bam, you got those bears locked in. They're getting squeezed. That's one of my favorite trades. Not the most common, right? What's more common also is this one. We roll lower. The bears come in. They have a lot of momentum now. They retest that low. And once they retest the low, now the rookies come in. Remember, professionals are selling high. The rookies come in and they get FOMO. They're late to the move. They start selling down here, one try, two try, and we blast back up. Okay, these are more common. These are very effective as well. Okay, we call these double bottom reversals. Now, keep in mind, right, once they retest, let the bears try a couple times and use their stops as fuel. Remember, bull overall market. We're looking for seller failures at support. That's the edge. Now, one more follow-up, and then we're going to move on here, is as we go higher, think about that new channel, right? As we go higher, think about finding that new channel, and you can easily add to your position or jump back in for another leg going higher here. If you look at it closely, what happened here today was we go to low, there's the bears once, there's the bears twice, we pop up, and then notice what happens. You draw that trend line off that high, you find that low, and then there's that bear trap right off the low of that channel. Think about that pattern right there over here. Okay, this stuff repeats over and over and over again, right? That's why it's so easy for me to teach it to you, because we literally see this stuff every day in our trade room. All right, so keep an eye on that as we go lower. Either a crown reversal off the low, or a double bottom reversal, two-try failure again, we call that in our free trading course, and then whichever entry pattern we can get right off of that low. All right, guys, that's how we're looking to make money on the pullback, on the deep pullback, or the reversal. Now, let's get down to business. Over on the NASDAQ right now, I know you guys are waiting for the NQ analysis right now. The NASDAQ is similar, right? But it's quite different. One thing right away you'll notice in the NASDAQ is where the S&P. So remember, the S&P is way back here, right? The S&P is right there, right, compared to the NASDAQ right now, right? The S&P is trying to finish off its rotation on the S&P. The NASDAQ is 10 miles ahead of it, right? The NASDAQ's a lot more bullish, but with that bigger move, does that make sense, right? So the S&P is still trying to get back to retest its range highs, whereas the NASDAQ's like, come on, we've been here for a while. So the NASDAQ is, you could easily say we're a lot more bullish in the NASDAQ right now, but you pay a price for that, right? You pay a price for that, and we're running out of space up overhead. That makes sense, right? We're running low on space. And again, when you go in to the description and you grab that 60-minute time frame, you're going to see for yourself. You'll see, right? The NASDAQ looks great, looks very bullish, but it's, again, we're knocking on. I mean, the S&P would love to be up here tomorrow, right? So the NASDAQ is bullish. We got a lot of strength going higher, right? A lot of movement going higher here right now. We're definitely very bullish. But again, we're knocking on some big problems there, right? We have our target is approaching quickly into an area of resistance, and the big objective in the NASDAQ, and again, you'll see this on the higher time frames. The S&P is a mile away from that, right? The NASDAQ is also a pretty good distance here, but we still have to break through this key area right here. Okay, so why does that matter, right? Why does that matter? The most important thing right now is we're bullish, but we don't want to buy high. Right? The S&P has room to go. We can be more aggressive on the way higher on the S&P. We can't do that right now on the NASDAQ. So my favorite trade for tomorrow, right? If we really get what we hope we get for tomorrow, is I would love to see the NASDAQ stick up here and give us a trading range. Because if we can stick up here and get a range going, which is very common, we saw a range today. If we can stick up here and go sideways, ranges act like magnets. And then we can use this area, which is a prior high, which now becomes support, to buy off of that support area. Okay? If there is a trading god watching my video tonight, please give us that setup for tomorrow, because that's the easiest way to buy relatively high. Because the range, right? The range, again, it confirms the move. The longer it sits up there, the more volume trades hands, the more acceptance, there is for the market, blah, blah, blah. Okay, so that is the dream come true. The next one, obviously, is a pullback. We haven't taken out the target yet. It's still a pretty strong move. So same basic idea as I mentioned on the S&P, right? The failure into pullback combo, the deeper pullback to try, right? The sharp pullback V bottom. So all the same stuff I just talked about on the S&P going lower is exactly the same game plan we have on the NASDAQ going lower. The one difference is I don't love the two-try trap, right? I don't love that trade up here for obvious reasons, right? Because we're running right into an area. So on the NASDAQ, why don't we talk about how to short the top, and then we can talk about the range, right? Let's cover the range first, because the range they're pretty common, and I'll tell you, once you learn to draw ranges, you'll be making a lot more money. I pretty much guarantee you that. So first of all, when it comes to ranges, the one thing you want to think about is in a bull market, right? In a bull market with a range, you want to focus on finding support levels underneath the trading range. Then what you want to do is once the range forms, you want to wait for a breakout, wait for a pullback. You want to try to trap in, right? So, wait for the short sellers to come in, trap them in, and go back into that trading range. Now, this is where the fun starts. This is why I love ranges so much. Is now the amount we go below the range is oftentimes the amount we go above the range. Okay, so the objective is way, way up here, and these love to slingshot. I mean, in all reality, this is the situation we're seeing right now on the S&P. right? This is the exact scenario that we painted last night and we're in the process of completing right now, except this will be on a smaller time frame, right? They're all fractals. So anyways, what we want to do is then go out, find that new channel, and then go looking for the entry off that channel. And what else you do is take some profit off at the top of that range. Definitely leave the runner for that pendulum swing. So this is the nuts and bolts of what we're looking for here tomorrow, right? And so now that you kind of have that roadmap in front of you, and by the way, that roadmap is a priceless roadmap. It could be here, 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 anywhere. If we can get up in, again, start getting this thing going sideways up here. Now, this area right there, right? Look at this juicy support right there, right? That's just gorgeous. Up, range, pull back, trap in, and back up, right? Again, that would be my favorite trade for tomorrow. Now, you know, my channel to trading gods isn't always clear, so I don't always get what I want every day. I've been pretty good lately, but not always crystal clear there. So if we go sideways here, right, we wait for that pullback. And remember, guys, it could be right there. I'd love to be down here, right? But you know, it might be a trend line right there. It could be that prior high. So, you know, we're gonna roll with whatever we get. But I want to pull back here. I want to get those bears to come in somewhere, try to get short, and then use their stops as fuel. Remember, the range itself acts like a magnet, right? So once we get that stop run, we can run back higher, and then, you know, obviously I'm keeping it simple right now. Oh, shoot, Joe. You deleted again. There we go. We'll get that better here for you, right? So again, pop up. This will be, again, be clear range. We drop it down. Sorry for that, right? We break it down, failure off that low, and then as we're going higher, what's going to happen is it's going to try to run back to that high. Your job is to find that new channel and then grab that entry off the low of that channel before we punch back to the high, okay? This is a very, very common setup. It's very, very reliable. You want to wait for these. So again, in the free trading course, we call these a failure pattern, right? And that's a first test. It could be a pullback pattern. It could be a trap like I'm showing right here. Right? Those are the two most common we get off of that low. And then again, right, take the bulk of the position off at the high. And then again, what I try to encourage my students to do is leave a little piece of that position open, right, for that runner. You might not get it, but a couple times a month, you know, on average, 4.5, 5 times a month, you're going to see this move just keep on going, and that one contract, 2 contracts will make up for everything that month, right? So you want to leave those runners whenever you can. So I really, really like that sequence on this range. You know, keep in mind too, some things to keep in mind, right? It is a pretty volatile market right now. This is a major high. If it was to, for example, really, really kick back like that, right? That real strong move, okay, then it's a 1, it's a 2. It makes sense, right? And we talked about those deep pullbacks, 1, 2. So if it really gets kicked back like that, give them 2 tries. Don't fight that direction, right? Don't fight that strong momentum and then get the rip going higher. So there is some variation to that, right? And obviously this is stuff we cover in our trade room, right? Because I can't go over all the variations on this video. Okay, so that's the game plan on the range. How would I sell this market? Now, if you like risk, a crown reversal can work. This is not my favorite trade here, and I talked about this last night. We are going to be at resistance up here, right? So is the S&P, but we're very bullish, right? And we haven't completed the big objective yet. Okay, once we get to the big objective, and you'll see why down in the description. Once we reach the big objective, okay, then we can start getting more aggressive at reversals. But right now, we're going to be careful. So my favorite reversal pattern in a bull market, remember, we're not a bear market right now, okay? My favorite one is a double top, right? So we go higher. Again, we look to trap in those bears with failure patterns. There'll be a channel right there, right? I got rid of it for illustration purposes. Now, we retest the high. Right? Once we go back and retest that high now we rope in some of the rookies, right? Remember, professionals like us are buying off of that low. We're buying support. We're buying low, right? That's still a good trade. Still a good trade. Again, we're overall bullish, right? Still a good trade. Now, when the rookies come in and they start buying into those highs, bad trade. right? Bad trade up here. We should be taking profit at the highs, right? Not re-entering long positions. If we do have some inexperienced traders, we assume they are inexperienced traders because the only people to be buying up there. We now can look for that. Again, we talked about this before on the buy side, but now we can look for that short back down, right? And that short back down oftentimes really, really gets good. You can go out now, find those new channels, and then grab that bull trap, that first test off the high of that channel. Okay, that's my favorite reversal for tomorrow. And notice it's not just picking a top, right? This is very far away from picking a top, right? This is getting a pullback. The buyers coming in, they're taking their profit. The rookies are coming in and trying to force the thing, these highs. We then eat their lunch, right, by selling into their stop losses. That's the two-try failure, the double top reversal, we call it. And then as we roll lower, now momentum turns. Okay, and again, when you go down in the description, okay, you'll see that 60-minute time frame, and you'll see why I would even entertain this, because there's basically a big old range down here, right? You can't see it on this chart. It's a big old range down there. And so if we do get that market to turn around, we can hit that short off the top of that channel, right? But again, notice the sequence here. All right. Now, again, if you like skydiving and wooden roller coasters and, peeking over the edge of the Empire State Building, if you like some risk and some danger, not my cup of tea, but a crown reversal, right? Which is basically the buyers try once, right? The buyers try twice, and there's that bull trap. This is by far the most aggressive because, again, we're so bullish. Okay, we know they're going to want to retest the high. I don't care what level of resistance I'm in. When I'm going against that overall momentum, I got to be careful of picking tops. All right. Now, if it was a bear market, right? If this was an overall bear market and then we pop, hell yeah, right? That's a great trade. But again, we're not there right now. All right. So all you crazies out, I'm kidding with you, right? I'm having fun with you guys, right? But if you have some risk tolerance, or if you've got another, if you have an opinion on this, that's a way to do it as well. And then, of course, right, we roll lower, and then this becomes, once it rolls lower, for example, I would rather take that trade. For me personally, I would rather take that first short right there, okay? This is probably, in this situation, this is probably a 40% trade, right? And you can make money of a 40% trade. You can make money if you're risking, 1 to make 5. But the average human being is not going to take 5 or 6 losses. They're not going to keep trading it to be able to leverage that odds, right? So 40% trades are tough for human beings. We're not computers. I would much rather grab this. This is an 85% trade, even 90% trade. Right? So I'll gladly skip this stuff. And again, right, remember, even a 40% trade is still going to work for 40 out of 100 times. So you won't see them happen, but again, these are reserved for the very risk tolerant traders. I would much rather, myself personally, go after that first test, right? A bull trap, because then you've got the momentum turning. You know where we're trying to go. It's just a much easier, trade. Anyways, I'm gonna go off my soapbox now on that, but that's my failure, my reversal, and I'm really hoping again. Hopefully we'll get that range. For tomorrow. But by the way, do I have any of those crazies here watching tonight? Anybody like wooden roller coasters? I'd love to hear from you. You cannot pay me enough to go on those creaky old roller coasters. I don't care. I will be the one in a million that falls out of that thing. Anyways, all right. Back to our back to oil here tonight. Don't forget we got rollover on oil probably tomorrow. We're watching oil for the 423 contract. We're bullish on oil right now overall. We are struggling a little bit right now, but it kind of makes sense if you watch last night's video. This is the trading range. We're anticipating that rotation, right? Just what we talked about on the S&P and the Nasdaq. But if you watch last night's video, we talked about that strong move down is going to want to be retested. And then sure enough, trapping those bears that spike back higher. Okay, so we're kind of going right along with what we talked about last night. Now we have a pretty strong move higher, and I would imagine now this is that new channel we always talk about, right? Get that failure, pop it up, grab that new channel. So again, if you've been watching so far, this should all make a little more sense here right now. So we're hoping that the buyers are going to come in and get long off that channel, right? Trap in some bears, trap in some bears, trying to go back up into this range. You can see the oil. Oil has a lot of open space to go, right? So there's plenty of space overhead for us to run. So, as we're going higher, think about this, and a lot of this will be overlapping on the Nasdaq and the S&P. As we go higher here, think about that bear trap, right? That's a great entry. If we do go higher, that creates a new channel, and my goodness, that is a fantastic trade. Might be the easiest trade for tomorrow, right? A little bear trap below that low, okay? If it does continue to pop and grind going higher, this off that high, right? Find those traps, find those prior swings, get my trap below prior swings, get my failure below the moving average, run those stops. And you can imagine, right, where they're trying to go. They want to punch out these highs, right? They want to take out that pendulum swing, okay? So that's the idea as we go higher here. If we go lower, I would not be surprised if they use that trend line. Oftentimes when trend lines come down like this, right, they'll come up and hit it right there. These can be a bit tricky. We'll be below the moving average at that point. So again, think about that channel right there, right? Think about that channel coming off that, right? So now we pull back, we run into that trend line, into that channel. The bears are thinking it's bearish, but again, we're long-term still pretty bullish on the 60-minute time frame, and that range overhead is still going to be our magnet. So once we get underneath that moving average, this is a great shot here now for a seller failure into pullback combo. And again, targets course top of the range, targets course up on those highs. That is a great setup. If we were to roll over, there really isn't a reason why we should go back to the lows. I mean, we've already retested that low. Even that strong move's been retested. So there really isn't any reason why the market should go back to that low. But if it does, it might. There's a range right here. And so, who knows, right? Pendulum up, pendulum down. It might, right? It might. But again, overall bull bias on this thing, it would simply be a double bottom. And what do we say, right? Double bottom reversal, right? Double bottom reversal. So now we go what? Again, it's a little more bearish than we'd like it to be. So we give the bears 2 tries, once, twice. We buy into those stops. We look for that channel. We look for this channel. Again, this is very much kind of repeating myself from earlier on, but now you can see how this can apply to a slightly different scenario here. Remember, the goal is to go back into the range, right? The goal here is to go back into that range, that failure. And again, it's 2 tries because we're not very bullish at that point, right? We're still bullish overall, but we're not bullish in the short term. And so when I'm trying to go long because I'm bullish overall, but I'm not so bullish in the short term, I have to get a catalyst, right? And the catalyst is a stop run. And the best stop run is let them try twice. Because there's all kinds of bears getting stopped out. Now, you'll also notice, too, there's a lot of support down here, too. So, I wouldn't be totally surprised if it kind of ran lower, strong move down, maybe a crown reversal right down there, right? Crown reversal, maybe a strong move down, a retest, and then a double bottom reversal, right? Again, we've talked about this before, right? They retest, 2 tries, find that new channel, hit it off that low. Again, I'm still trying to buy, right? Because again, the overall bias is bullish, and it may not look very much right now, but you'll see that in the 60-minute time frame in the description. All right, guys. What do you think, by the way? What do you think? Do you agree with the analysis tonight? I would love to know. Know your feedback as well. I think we've covered quite a bit of the details here for tomorrow. The big variable right now, obviously, is this news report tomorrow morning. I don't think it'll be as crazy as the CPI number, but who knows, right? We always come out every day. My goal, remember, we don't do daily goals, right? There's no such thing as a daily goal or a weekly goal. My daily goal is to keep an open mind and execute correctly. We take whatever the market gives us. Don't go strapping yourself down with, I got to make $500, I got to make $1,000, because we don't control that. All we control is when we decide to take trades. So we come in every morning, we prep our charts, we do a short mental warm-up so we know what proper execution looks like, and we take whatever the market gives you. If you want to make more money, Don't trade more often, trade more size, get better at squeezing more out of each trade. All right, I'm rambling. I could talk about this stuff all night long with you guys. You guys have been too kind tonight. They're probably sick and tired of hearing my raspy voice at this point. So enjoy the rest of your evening. Don't forget, if you have any more questions, don't be afraid to drop questions in the comment section below. I'll put all the free course links, all the membership links, everything you need to learn more and join us in our trade room each day. The good stuff tomorrow is 8 o'clock Eastern time in our trade room. If you need any help, right, any help getting into membership or the free course or anything along the way, the easiest way to get help is to call the office. We're always here to help. You can use live chat as well. That's the easiest way to reach us. Again, I will be checking the comments section, but if you want help right now, call, email, use live chat, and we'll help out along the way. All right, guys. Hope you guys enjoyed the video tonight. Hope you stayed all the way to the end. Thank you so much for watching. Use this knowledge to make some money tomorrow. I'll be back tomorrow night, same time, same place. We'll get ready for OpEx Friday, but hopefully I'll see you trading along with us tomorrow morning in the members trade room, 8 o'clock Eastern time every morning. All right, guys, I'm out of here. Be well. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.